Good evening, traders. It is Wednesday, January 8th after the close, and it is time for my weekly swing trading video. Man, what a day we had in the market today. All sorts of exciting news. We had President Trump with a press conference. We've got some conflict in the Middle East. Here's the bottom line. This market has a very, very strong bid to it. It is overbought technically. It's overbought fundamentally. It's overbought sentiment-wise. So we could expect a pullback in here anytime, or the market could just go sideways. And when I'm talking about a pullback, any pullback that we might possibly have would be very brief and shallow, but still kind of nasty for swing traders. So we have to be a little bit cautious with our bullish put spreads this week. I went through a lot of stocks, and I got to tell you, I looked at a lot of these charts and I had difficulty finding some really good picks because I typically like to buy stocks that have pulled back and that are starting to rally off of a support level. Could be a major moving average, could be a technical pattern like a bullish hammer. I'm seeing stocks that in many cases are going parabolic. That is concerning to me. So again, you can see here this upper end of a trading channel that the SPY has been in, and that has been breached. That usually means that we're going to see a pullback pretty soon, like maybe in the next week or so. But we had news that we had killed one of the Iranian leaders in Iraq this week, and that had all sorts of fear circulating that we were going to get into another prolonged conflict and possibly a war. So we had this move right here on the first day of the trading year. That was Friday. We closed higher than the open, and then over the weekend, that sentiment was echoed. President Trump had a bunch of negative comments, meaning that Iran better watch its step. There could be possible conflict. So this was the really telling bar to me. Monday, we opened near the support level, and we instantly fly higher, closing on the high of the day. This is a giant bullish engulfing pattern. Had a resting day yesterday. What happened today? After the press conference, the market shot higher. Let's go into that 5-minute chart. Here you can see the move higher just blew right through the previous high, which incidentally, in the chat room, man, we had a fantastic trading day today. We got long SPY calls right here, the January 10s. I think I was trading the 324s. I know I made about a 22% profit on those. Got out a little bit early, but hey, 22% profit. Market spikes in here. We get this large red candle. So I did try and short in here. We had a nice little, let me put up the 10P indicator. We had a nice little spike in the 10P indicator. We had it rolling over, so it looked like it might be a good opportunity to short in here. So I got short. I had to cover in here for a small loss. It was mainly implied volatility decay and time decay because I was trading options that expire in 2 days, but that was okay. Took a very tiny little loss in here, and then what happened? Then we got another trough right in here. Not a deep one like I typically like to see, but there were some other things that told me that the market wanted to head higher. We had tails under body here. That was a good sign. We had a little bit of a rally, and then this is the cleanup, as we like to call it. This selling right in here with these red bars trapped anybody who was looking to buy a bounce. Too early. Needed one more test of that support level. We barely made another new low, so just a marginal new low here. And what happens on the next bar? This is the key bar right here. Big rally, close on the high, and then we are starting to lift off a little bit here. Bounce right back to test this little resistance level. Downward sloping trend line here. Then we get our bullish 10P cross. Once we took out this downward sloping trend line, I knew I wanted to be long. I bought calls in here. I actually bought the lotto calls that expired today, January 8. I bought the 325 calls. I paid 29 cents for them. I was hoping to sell them for 58 cents. But after such a big run here, I sold them for 52 cents. Almost got a double out of them. Would have had one if I'd have held on a little bit longer, but I didn't care. I was very happy with that profit, and I expected a little bit of a pullback here on the close, and then another push high higher, possibly closing at another all-time high, and I was looking to scoop those 325 calls again, and patience paid off. Started to see this long red candle close on its low, and I went, ooh, that's a little bit deeper than I would have expected. And then once we took out that previous high of the day, it was all over. Well, there was news in here that there was a bomb that exploded in Baghdad, and that's what sparked all of that selling. So we had a fantastic day, though. 100% winner almost. We had a 22% winner, tiny loser on the puts. I'll take that any day, not to mention all the trades that were done in the chat room today. My God, incredible. Incredible trades all over the place. Well, a lot of these stocks are breaking out on this new all-time market high, and we were seeing stocks surge through their all-time high, leaving them again very overextended. So where do we go from here? Holy cow. The trader in me wants to keep things very, very light. I want to stay in cash. I want to wait for a better trading opportunity. I at least want to wait for the market to go sideways for a bit and tell me that this support level is going to hold and that earnings are going to be well received. Because as it stands right now at a forward PE of 18, there aren't really too many things that could stand in the way of the market. Everything looks good. We've got the trade deals are coming up, USMCA, the China Phase 1 deal, that's all baked into the market. That all looks good. We know the Fed's going to be dovish through the entire year, so that's not going to get in our way. The impeachment, who cares? The market's completely discounted it. It's not going to be an issue. We got Brexit happening probably in the month of January, so those are all still the good issues, but all that news is priced in. Now it's a matter of, can the stock move higher after such a big run when valuations are getting pretty lofty? I think that we're going to have a stiff headwind. Asset managers will buy dips. I don't know where that dip is going to come from or what's going to spark it. Perhaps getting a little ahead of itself, earnings season might be the splash of cold water that gets us a little selling. But the bid typically stays strong through Apple earnings announcement, which is almost the halfway point of earnings season. So I still think it's safe to put bullish put spreads on. I'm a little bit concerned that it was so difficult for me to find really good candidates. I'll give you a couple of examples, like AMD. And these are just stocks I happen across, and I went, holy cow, how can I sell any puts on that thing? Apple. Wow. I don't want to be selling bullish put spreads on Apple. Okay, well, what about Facebook? Jeez, that's a big run. Look at this, especially in the last week. You can see how it's starting to get up through the upper end of its trading channel. So let's draw a trend line here, and I'll show you what I'm talking about. So you've got a trading channel right like this. That's the lower end of the trading channel. Then you've got another upper trading channel that'll go something like this. Click here. Click here. This one doesn't line up as perfectly. There's not an equal distance, but close enough. Here's the problem, is once you have these upward sloping trading channels and you start poking out above the upper end of the trading channel, this is usually when you start seeing some reversals back down into the middle of the trading channel. The SPY has the same formation. So that's concerning to me, especially when I look at that and I see it stock after stock after stock after stock. So I've got some picks for you. I think this is still a pretty good time to kind of let earnings season play out. Let's see how the earnings come out over the course of the next week or two. I had said put 50% of your allocation capital to work this week. I think you could probably pull back on that and maybe do 25% and look for some day trading opportunities. That still would be much more prudent. When I could see picks left and right, and typically if I'm doing these videos on a Wednesday night, it takes me maybe 10, 15 minutes. I've got all the candidates I want. You've seen me over the course of the last 3-4 months. I might have 8, 9, 10 candidates in any week. So I don't have a shortage of plays. Usually I've got too many of them. This week, There are warning signs because it was really hard for me to find stuff that I liked. So here are some stocks that I like. And I had to go through a number of different searches. And I came up with four that I really think will be good. And we'll take a look at them. I have a total of six because I've got two bullish put spreads that I posted during the week. So I want to make sure that we take a look at those as well. So the first candidate that I've got is CI. I think that's nice. Now this is a big run here. This would normally be pretty concerning to me. However, after that big run, you can see how it's been spending time moving sideways and consolidating. You got a little bit of a dip here. You had a nice breakout. Got another little bit of a dip here. Got another nice breakout. In this particular case, I like selling a put spread below this trend line, using that trend line as the technical support, and I also want this horizontal support to hold as well. So those are the two things that I would lean on, and I'll go through the exact bullish put spreads that I would be putting on. Or in fact, why don't I just bring the screen in right now and I'll show you. The bullish put spread that I have for this one is the CI, and let's add so we can take a closer look at it. It's selling the CI January 17 207.50 puts and buying the January 17 205 puts and trying to do that for a credit of 50 cents. So I think that particular spread could actually be pretty decent. And if I hover over the order, you can see the details here in the video. So I think that one's pretty nice. I've got to get 50 cents for these spreads. If I'm doing a 2.5 point spread, 2.5 points minus 50 cents is $2. That's my maximum risk. That's also the margin that I need to put up. 50 cents divided by $2 represents a 25% return by January 17th. That's a nice return in a little more than a week. So that's a 25% return. Again, risk, reward, no hand in hand. I like that spread. If we get another day or two where the market's continuing to climb higher and you get a chance to reel these bullish put spreads in and bank some of that money, I think that's always a prudent thing to do, especially when the market's been moving like this. Again, I don't see any speed bumps. Unemployment report coming out Friday. ADP was good today. Unemployment report should be good on Friday. So I don't see any speed bumps. We just want the market to tread water right now. And I don't want to get into anything that is too heated, because those will be the first ones to pull back. Really like Costco. Out of the plays, this is probably my favorite play. And you can see how it's been in a little steady downtrend here, but it has been compressing recently, and now it's trying to poke through that 100-day moving average, and it's also getting through this downward sloping trend line. I like that. I also like the tails under body right here. 1 test, 2 test, 3 test, 4 test. So this support level right here at the 207.50 level has been holding nicely. Now I'd like to see better relative strength out of this stock, but I also don't want to be buying stocks or selling bullish put spreads on stocks that are flying to new highs and have gone parabolic. So this one might attract some buyers because it's a laggard. Very stable company. So I do like this one, and I'm going to bring that order entry screen back in here so we can take a look at it. In this case, we'd be selling the January 17 290 puts, and we'd be buying the January 287.50 puts and doing that for a 50-cent credit. Okay, so we're selling the 290s, we're buying the 207.50s, and the 290s puts us right in here on these long tails under body, which has been support. So I do like that spread. I think it's good even without the stock going through the 100-day moving average. Now let me just say one thing also. The market bid is going to be challenged and tested every single day. So you're going to see the market open. Maybe it opens a little bit higher, but at some point we're going to pull back and sellers are going to see just how strong that bid is. And then after the first hour of trading, the bid will strengthen, buyers will look around and go, yeah, the coast is clear, grind, 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 grind higher. So the point to all of this is that in the early part of the day, the first hour of the day, let the market come in. Let it work off the jitters. Let it work off whatever news is out there. And then once that bid starts to settle down, see how the stock did. If it came in, then you might be able to get a really nice credit for it, especially as the market starts to stabilize. Then put your spreads on. If the market gaps higher, the stock gaps higher, do not chase. You don't need to chase anything in this market. In fact, that's the philosophy that every asset manager has right now. I'm not buying stocks and I'm not chasing stocks at a forward PE of 18. If they dip and they want to come in for me, fine. I'll be a little bit more of an aggressive buyer on a dip. But I'm not going to keep chasing stocks at an all-time high. So I think you'll probably see a buyer's boycott here pretty soon where they just don't want to keep chasing at these levels and they'll wait for the market to come in. So bullish sentiment's very high too. If we get any kind of news, bullish speculators will get it flushed out very quickly just as they did today. So I like Costco. I'm going to keep going down the list here, and I'm not going to get to Lennar or Netflix just yet. Twitter. We've been on Twitter before. I like Twitter. Twitter's got this nice upward sloping trend line. It's gotten through that resistance level right there. It's got another little resistance level that it poked through today. I think you need to go down to the $31 strike price. And actually the 31.50s will be fine because you can see this upward sloping trend line. We'll get to 31.50 in here and hover over the E for the earnings date. And you can see it's on February 6th. So we want to make sure that these options expire before earnings release. And you can see here selling the Jan 31.50 puts, buying the $31 puts. We've got to get a 10-cent credit for that. And I think they were just about at that 10-cent credit. So some of these you might have to work a little bit to get that spread done. And let's go to the final one. Workday has been nice. It's not the most liquid stock, but it's got a very good technical pattern to it right now. So you've got this almost cup and handle formation right here. It's a little bit downward sloping, but you can see it right here. That's nice. It's broken through that horizontal resistance line, and it's also above that 100-day moving average. You want to key off of that 100-day moving average. Now this is a choppy stock, you can see, based on the price action, so let it come in. Today had a nice big long green bar. Hopefully we'll see a little bit of a retracement tomorrow. You're not going to need much because I like selling a bullish put spread using that 170 strike. And on Workday, I like selling the 170 puts, and I like buying the 167.50 puts and doing that for a 50-cent credit. It's not at a 50-cent credit now. We need a little bit of a pullback. Again, fairly wide bullish, fairly wide bid-ask spreads, and I also want to make sure that I've got the correct. These are January 24s on Workday. Costco, we've got January 17s. Twitter, we've got January 31s. And on CI, we also have January 17th. So we've got a couple of spreads that will expire a week from Friday. And then we've got one that'll expire the week after that and one that'll expire the week after that. By that time, we'll be about 2 weeks into earnings season by the time the last one expires. The bid to the market should still be pretty strong. We still have mega cap tech stocks on deck reporting at that time. So until Apple reports, I think the market bid will be pretty decent. So here's the other thing that I need to bring to your attention. We're getting into earnings. We are getting into earnings season, and there are going to be some phenomenal earnings plays. Oh yeah, almost forgot. I got 2 other stocks that I need to go through. Netflix, I showed you earlier today, selling that bullish put spread using that 325 strike price. We sold the 325s, 322.50s. We did that for about a 60-cent credit. That was a gorgeous one, and I posted that video 2 days ago. That one's in really nice shape. The one that's not working out too well is Lennar. Today, I love this. I love the stock pulling back and breaking through this downward sloping trend line on earnings above that 100-day moving average with volume. Everything looked so good. And then 2 hours into trading, right in here, they lowered guidance. Yikes. Everything was looking so pretty right in here. I was like, yeah, this is a good spread. Boom. Uh-oh. Well, I expected this opening price right here to hold at $58. It didn't. Okay, so now I've got a problem, child. I got a trade that I'm going to need to take care of. What am I going to do with this? Well, here's how I'm going to approach the trade. I'm going to put up the daily chart, and you can see the 100-day moving average here. And you can see the long red bar. This is a bearish hammer right here. Not good. If tomorrow the stock takes out the 100-day moving average, that will not be a good sign. And I'll know that this stock is heading lower after that lowered guidance. And this downward sloping trend line will have held. So all of a sudden I'm pivoting from a bullish position and a bullish opinion to a bearish opinion. Now, I put this up in the chat room, which is a day trading environment, and that's how I plan to exit this trade. Is I'm going to be day trading it. I will buy my short put back if that 100-day moving average is violated, and then I will sell the long put by the close of business that day. So by legging out, I should be able to do fairly well. I should be able to mitigate the damage on it. Again, it's a 50-point credit spread, meaning there's 50 cents between the strike prices. So both options will have fairly high deltas now that they're in the money. So that's what I plan on doing with that trade. If by chance the stock pulls back to the 100-day moving average and it bounces off of it, I might still be okay with my bullish put spread. And if that happens, then I'm going to stick with the trade. So I wanted to point that out. I do have losers. I have losers just like everybody else. I got blindsided by that lowered guidance well after the earnings report. So now I just have to deal with the aftermath. Always have an options trading game plan before you put the trade on. So what I wanted to show you is that there's so many resources in Option Stalker for earnings season. This is your pre-earnings search. I don't particularly like to hold over the actual earnings announcement, but this will show you the expected move of the underlying, the average move, the percentage of times exceeded. So obviously if you've got something that's exceeding the expected range 100% of the time over the last 12 quarters. I have all the data and all the statistics. This is all based on the last 12 quarters. Well, that would be a good one that you would want to buy a straddle on. If you've got a stock that never exceeds the expected range, like FCell right here, that would be one where you want to sell an out of the money strangle with the notion that the stock is not going to be able to get out of that range and you collect the premium on both sides. Again, I am not an advocate of holding over earnings announcements, but many of you are, and many of you may have a system to do that. This is a very valuable resource. At very least, check this list, pre-earnings options, to make sure that you don't have any stocks that are going to be announcing earnings after the close or before the open the next day, which I did not mention that all of these companies either reported after the close today or before the open tomorrow. So this was your last chance to trade them before earnings. There are two searches that I want to show you, and these are ones that you should pay particular attention to. Buy into earnings, a very long list. These stocks have rallied more than 75% of the time 2 weeks ahead of earnings. They all report in the next 2 weeks. So you can scan through this list and look for opportunities. I did that, and I had a really hard time finding anything that I really liked because they've all gone up so much. So kind of slim pickings right now, but we're not really into earnings season just yet. So this list will continue to grow and grow each day. Once we start getting earnings reports, the strong after earnings will be an excellent search because we'll be able to look at these stocks right away and it identifies stocks that gapped higher on the earnings announcement number and are still above the opening price the first opportunity that they had to trade. And it's a great search a day or two or three after that earnings announcement, because oftentimes the stock's all over the place right after it announces earnings, and then the dust settles, and when you go into this search, you can knock through this list very quickly and find some absolute beauties. You can bet that that's exactly what I'm going to be doing in the course of the next 2 or 3 weeks when I post these swing trading videos. That's going to be a go-to search for me. So those are a couple of really good earnings searches. Of course, we've got those on the bearish side as well. And of course, in custom search, you can search for stocks that are going to be reporting earnings very, very soon. Just go in here, mark the box, and put in your selected earnings date. So that's what I've got for you this week, folks. Market really strong bid to it right now. Yes, it's overextended in almost every facet. I don't know that we're going to get a drop because there's really no speed bump. There's nothing to cause that drop. I can't see any surprises happening right now. And that tells me that we're probably going to just establish a range and trade within that range over the course of the next 2 or 3 or 4 weeks and just let time pass, see how earnings season unfolds. If the earnings guidance isn't good, if the earnings are out of whack and stocks are overvalued, they're going to get hit pretty hard right now because we've got them moving so much higher. So be careful. Don't put 50% of your bullish put spreads on this week, and don't allocate 50% of your capital. Stick with 25%. Let's get into next week and let's see how some of these earnings reports are. Let's see how the earnings reactions are. That's the super important part. Thanks so much for watching. If you're a YouTube subscriber, I typically post these swing trading videos about 3 days after the fact. Hope to have you aboard as a member. Watch previous swing trading videos to get a feel for our performance. I always review all of the picks from the prior video when I do these swing trading videos. Thank you.